Hey, this is Brad Nickel. I want to thank you for taking the time to listen to Mission DeFi today. I know you have lots of choices for your listening and learning, and I'm honored that you consider this one of the things that is important for your knowledge in the DeFi space. I have a big favor to ask you, and that is if you really love what we're doing here, if you could take just a couple of minutes to go to Apple Podcasts or Spotify and just quickly rate and review the show. It would do amazing things to boost our reach in the algorithms of those systems and will help us spread our mission of financial freedom and DeFi everywhere. Thank you for listening and thank you for participating. You can listen to all of our previous episodes at missiondefi.com. Today's episode is with Publius from Beanstalk Farms, and this is our third interview with him. If you want a deeper dive into the protocol and how it functions, I really encourage you to go listen to episode 2. You can see the links in the show notes to those previous episodes.
So if you're a business and you're trying to run a business profitably, you can't be denominating things in Bitcoin or Ethereum that are excessively volatile. You can, MicroStrategy does it, but in general, it's hard for businesses to do that reliably.
Sure.
And they're looking for a stable denomination of value, a stable unit of account, stable medium of exchange, even a store of value depending on the company. And the concept is that stable coins are really the low volatility option on chain. But stable coins have really high carrying costs. You can use decentralized stable coins that have limited supply. You can use centralized stable coins with slightly larger supplies, but all of them have non-competitive carrying costs. And what that really means is that the cost to use the stablecoin doesn't compete with the cost of using dollars. And let's try to get into a little bit why that is. So why is it that businesses built on Bitcoin can't compete with businesses built on dollars? The reality is that the interest rate on dollars is much cheaper than the interest rate on Bitcoin. Why is that? Well, the interest rate on dollars is heavily manipulated by the Federal Reserve. And they're minting dollars constantly in order to buy bonds and artificially manipulate the interest rates lower. And in short, if I'm a business, I'd much rather build on a subsidized system with lower interest rates than on a non-subsidized system with higher interest rates, just from the naive perspective of maximizing my business profits.
Sure.
And the reason the government is able to do this is because of the fiat system. They can mint new dollars, I almost said new beans, and buy treasuries.
Someday.
Exactly. So Beanstalk similarly is able to mint beans arbitrarily. And through the seigniorage, through the distribution of beans, Beanstalk is able to create competitive carrying costs, where in fact, the cost of holding beans for your business is probably competitive with the cost of holding dollars.
Right.
And we would argue more competitive.
Welcome to Mission DeFi with Brad Nickel, where we explore projects in decentralized finance that are innovating and driving our mission of financial freedom forward. Thank you for listening. If you like what you hear, please subscribe, rate, and review Mission DeFi and spread the word by posting a tweet to the show. All opinions expressed by Brad Nickel or his guests are their opinions and do not reflect the opinions of Black Knox, Material Indicators, or any other affiliated organizations. You should not treat any opinion expressed by Brad Nickel or his guests as an inducement to make a particular investment, follow a particular strategy, or become involved with any project. A project being featured on the show is not an endorsement of that project in any way. This podcast is for informational purposes only. Now, here's Mission DeFi with Brad Nickel.
All right, I am excited to have for the third time on Mission DeFi, Publius from Beanstalk Farms, one of my favorite projects. And full disclosure, I have some money in the protocol and am proud to have it so because I really like what they're doing. I like their ethos. I like how they're approaching things. But first of all, Publius, introduce yourself and tell us a little bit about yourself and the background of the project, if you would.
Thanks for having us, Brad. So Publius is the founder of Beanstalk. I'm 1/3 of Publius. Prior to the April exploit, which we'll talk about, we were totally anonymous. And the reason for that is we don't really want to be the center of attention with regards to Beanstalk. We recognize we're decent spokespeople for the protocol and are happy to do things like this and talk to you about it, Brad. But in general, at this point, I think the most exciting part for us is that the Beanstalk community has grown over the past year plus since we originally deployed Beanstalk. The protocol and its community has grown to include over a dozen full-time contributors, as well as a bunch of part-time contributors and volunteer contributors. So it's a lot more than just Publius at this point, but that's a little bit about us.
Yeah, so you weren't speaking about yourself in the third person. Publius is a group of folks that actually started this whole thing, but you guys have an ethos of full decentralization. You want this to be something that lives on and that a community governs. Tell us kind of real quick, because we've covered this in other episodes, and I'm gonna link to it for anybody listening to this. I recommend you go back and listen to the first 2 times we interviewed, but tell us a little bit of origin story and, the launch story. I remember your first interview, how excited you guys were that there had been a severe event, a dump, in how radically and well that Bean maintained its peg. That was actually one of the things that got me most interested in the project, was kind of understanding that. But anyway, give us a little background and then we'll talk and jump into more recent history and then the future.
Yeah, that first podcast we recorded together, I think, is quite the artifact, because that was happening during the middle of that major first DPEG in September. That was before we'd figured out the luxuries of electronic voice modifiers. So lots of good nuggets in that interview. But to talk briefly about the history of Beanstalk, so Publius deployed Beanstalk on the Ethereum mainnet on August 6, 2021. When the protocol was originally deployed, there were only 100 beans. And over the ensuing 8.5 months or so, until April 17th of 2022, the protocol grew from $100 market cap to over $100 million market cap. And that was through a wide variety of pump and dump cycles, growth cycles, debt cycles. Beanstalk really went through the whole ringer. And at some point in January or so, the debt level, which in addition to price, because Beanstalk is a credit-based protocol, it also optimizes around its debt level. The debt level started to flatten from when it was deployed in August until January. The debt level was just a straight line upward. But over time, through the improvement of the mechanism, through various on-chain governance proposals, Beanstalk was sufficiently improved such that the debt level actually flattened, and then in March or so started to decrease, which was a major proof of concept in terms of the protocol demonstrating an ability to deleverage and pay off debt and demonstrate its credit worthiness, which, again, because Beanstalk is a credit-based protocol, is a big deal. So
Right.
that deleveraging that started in March continued into April, and the protocol was growing exponentially effectively until there was a governance exploit, and an attacker was able to take advantage of the on-chain governance system that Beanstalk had implemented and its lack of flash loan resistance, and effectively take $1 billion flash loan, borrow $1 billion from Aave, deposit $1 billion worth of value in Beanstalk. In doing so, acquired a 2/3 majority of stock, the Beanstalk governance token, and then they could do whatever they want with the contract. So they withdrew all of the exogenous value from the contract, the non-Beanstalk native assets, the beans, not the beans, the Ethereum, the Ether, the USDC, 3Curve, and LUSD. So it's three currencies, Ether, 3Curve, and LUSD, and left the beans totally worthless. So all of the beans derive their value from whatever you can get trading them in a liquidity pool, and all of the value in the liquidity pool was stolen, making the beans effectively worthless. So this was in April. And at the time, again, we were totally anonymous up until that point. Everyone thought we did it because we're anonymous founders. We're talking through robot voices, and all of a sudden everyone's money's gone.
Right.
So we made at the time, difficult, but in hindsight seems like an obvious decision to dox ourselves, tell everyone who we were, that we had nothing to do with the attack, and that we still have high conviction that Beanstalk is worth building and is hopefully going to change the world. And the response, it was a difficult week. There was like 3-hour plus Discord calls with hundreds of people every day for at least a week. It was,
Dude, that was a crazy marathon. Every time I looked up, there was another town hall, another Discord call, another
people
something.
had questions. People want to know, where's my fucking money, you know?
Exactly.
So yeah, it was a crazy time. And the hardest part was telling everyone the money's in tornado cash. So we know where the money is, but there's nothing we can do. So since then, we've really been totally amazed by the response from the community and contributors, more importantly, that a real chunk of the core contributors, I'd call maybe a dozen or so contributors over the past 4 months, have, without pay, without any expectation of anything from the DAO, have just been grinding their asses off, hustling as hard as could be. And on August 6th of 2022, 1 year after originally deploying the protocol, we, along with a dozen plus of our new friends, participated in the redeployment of Beanstalk. And that was done according to the will of the DAO. Even though on-chain governance has been removed, governance is still happening through Snapshot, and the will of the DAO has continued to be executed. The terms of the recapitalization, which is well underway, were all approved by the DAO. And so despite the attack, and there's certainly some compromises that have had to be made, particularly in the short term, the ethos and integrity and spirit of Beanstalk as a decentralized, permissionless protocol is still intact. And while at the moment the protocol is run through decentralized governance via Snapshot, which can certainly be improved back to on-chain governance, the reality is that given the circumstances, we're quite enthused about how the past 4 months have played out and very excited about the opportunity the protocol now has. So maybe to wrap it up, since redeployment on August 6th, the price has been pretty hard pegged to $1. The pool that Bean's trading against now is just Bean 3 curve, whereas when it was originally deployed, it was Bean ETH. And so there is less volatility from trading against 3 curve than trading against ETH. And that does factor into some of the decreased volatility. But nonetheless, the protocol is doing a pretty good job of oscillating the Bean price above and below its peg of $1. So far, so good. This is very much a long game here, and the only way for Beanstalk to win that game is to continue to be on and demonstrate that it works. But every day and every hour that the protocol continues to demonstrate efficacy is a success for us.
Yeah, so I think I want to climb a little bit into the mechanism you guys decided to use to try to repay the folks who lost out with it when their beans were made worthless. But I think in order to do that, if you could do a quick overview on how the protocol functions. And again, I will reference everyone to previous episodes where you went into a lot of detail on that. So, just in brief summary, and then kind of the mechanism that you have used to raise funds to help, at least make it less painful for people that did lose the value of their beans in the exploit.
Sure. So with the classic Publius caveat that the U refers to Beanstalk or the Beanstalk DAO, but
Sure.
I'm happy to answer it.
Sorry about that. It was voted on. It is a DAO. There are no big VCs. Well, they may have bought since, but this was a completely fair launch. You guys,
it's the royal you, the royal we. It's all
exactly.
good.
Exactly.
So the state of Beanstalk prior to the exploit was that there were really two classes of holders of the system. There are creditors, and obviously anyone can be any mix of the two. But there's creditors who lend to the protocol, and they have pods, which are debt that is paid on a first in, first out basis with no maturity. So at some point, each pod will become worth $1, but only when the price of a bean is at or above $1. So at some point the pod will be worth $1, but you don't know when.
Right.
Then the other class of holders in the system are silo members. And the silo is the Beanstalk DAO, but you can kind of think of it as a bank, where anyone can come and deposit either beans or LP tokens into the protocol and in exchange receive governance tokens, stock. And if you hold governance tokens, you are entitled to a portion of new bean mints. So every time the bean supply increases, a portion goes to paying off debt and a portion goes to stockholders. And it also entitles you to participation in governance. And so when we say the DAO voted on things, we mean that the silo members, the people with assets deposited in the protocol, they voted on things. Right. Now, the starting point prior to the attack, as we were saying, is that the beans derive value from the liquidity that they trade against. So what's the price of a bean? Well, it's whatever you can get in the liquidity pools that they trade in. And so that's why, in addition to depositing beans, people can deposit LP tokens into the protocol. And the protocol facilitates within the protocol the conversion of beans to LP tokens and vice versa in order to support peg maintenance. And so, in short, to set up the state of the attack before, or the state of Beanstalk after the attack before talking about the recapitalization, the point is that all of the silo members, the DAO members, had all of their value either stolen or destroyed. So all of their LP tokens that were half beans and half ether or half 3curve or half LUSD, all of the non-bean portion was stolen. And therefore, all of the Beanstalk can reissue new beans, they're still worthless. So the point is that the stockholders, the silo members, they were the ones that had the value stolen from them. The pod holders, they're holding debt, and their debt will be paid back whenever it's paid back, but there's nothing that has changed the state of a debt holder effectively, other than the state of the protocol is not doing so good, which probably doesn't bode well for you're holding the protocol's debt. So that's where Beanstalk was in the immediate aftermath of the attack. And the primary questions were A, how to try to recapitalize some of the approximately $77 million in non-Beanstalk assets that were stolen from silo members, and two, how to recapitalize the protocol in a way where you're aligning the old holders, the new participants, and most importantly, Beanstalk with its peg maintenance. So you can't compromise the ability for Beanstalk to maintain its peg in the name of recapitalizing old money. That's not an ethical thing to do. So when it comes to what's the right way forward, the priority has to be putting Beanstalk in a position to succeed. And then if Beanstalk can succeed, hopefully over time, everyone will be made whole. But you can't fight Beanstalk in the name of recapitalizing people. And so with those guiding thoughts in mind, the DAO, it was like 6 weeks or so, maybe a little less, but 4 to 6 weeks of heavy discourse, iterations on ideas, votes. It was total nonsense, but it's like, you got to figure it out in real time. A lot of moving parts. And the point is that over a couple of weeks, again, probably 4 to 6 weeks, the DAO decided on a final game plan. And the structure of the recapitalization, ultimately called the barn raise, was to sell fertilizer tokens. And the fertilizer tokens can be sold for USDC. You can still buy the fertilizer tokens. They were on sale for at least maybe, I think it was like 2 months prior to the replant, the relaunch. And if you had purchased the fertilizer before the replant, Beanstalk would over time pay you a 500% interest rate. So 5x plus your money back. And that interest rate was cut down to 250% upon replant in August. And since then has been coming down by 0.5% every hour until it's supposed to hit a low of 20%, I think in a couple of days. So at that point, it'll just stay at 20% until all of the fertilizer has been sold out. And the point is that, well, there's a couple points. One is all of the debt issued from the purchase of fertilizer now forms a third class of holders in the system. So before there were pod holders, there were silo members, and now there's fertilizer token holders. And when new beans are minted, until all the fertilizer is paid back, 1/3 of bean mints now goes to paying back the fertilizer debt. And so instead of half to pods, half to stockholders or silo members, now it's 1/3. And the point is that the protocol is selling this new class of debt in order to, over time, bring in the non-Beanstalk native value that was stolen. Now, the fact that the interest rate is going down to 20% makes it such that it's not really likely that more of the fertilizer or a significant chunk of the fertilizer is sold now. It's more likely that there's no more fertilizer or minimal fertilizer sold for the time being until a lot of the debt that already exists on fertilizer has been paid back. And once all of that debt has been paid back, now earning that 20% and getting 1/3 of bean mints looks much more attractive because of the time preference. So it's this unique new asset that's been introduced into the protocol. It was very neat to see how it traded and to see the demand prior to the replant, a little bit of demand after replant, and then the demand basically disappear in line with how you'd expect people to play it because of the structure we just described. But the concept is, if we go back to what we were optimizing around, which is peg maintenance, Beanstalk has, since replant, continued to cross the bean price above and below its peg. The price hasn't really dipped above and below 1 cent plus or minus the peg, with the exception of a couple of short stints where there was a major sell or a major purchase and it was relatively quickly returned to the peg. And obviously, this is no guarantee that the protocol will continue to perform in perpetuity. But again, from our perspective, every day and every hour that this thing continues to demonstrate efficacy is a win, and something that the protocol can build on into the hopefully indefinite future.
Yeah, that was awesome explanation, by the way. Thank you. Look, right now, 23.51% of the fertilizer was purchased, which essentially means those people that were holding beans that went worthless, if today we're factoring in kind of what they're getting back basically 23.5% of their money. Is that correct way to look at it?
So it's a little funky. So one of the things is that in order to align the incentives between the people buying the fertilizer and the people benefiting from the purchase of fertilizer, is that the assets are immediately recapitalized. So 23% has been sold. Therefore, if I had 23 or 100 beans in the silo, I now have 23 beans in the silo. Right. However, until the fertilizer is paid back 100%, the 23 beans that I have is subject to what is called a chop rate, where if you want to claim the beans, you have to chop them. Sure. And the chop rate is a function of the percentage of fertilizer that has been paid back. So if right now 1% of the debt issued to fertilizer has been paid back, so you're actually getting 1% of the 23 beans. But you have the 23 beans as long as you're willing to wait. And right. more importantly is that the stock, the governance tokens for the 23 beans, those are yours. Those have been revitalized. And so people today that had 100 beans in the system prior to the exploit are receiving new interest on the 23 beans that have already been recapitalized. Nice. So there's almost a separation between the recapitalization of the old assets, which is going to take time, and the distribution of new assets, which is happening all the time. And so even though the holders of the old assets, they're called unripe assets, and they're ripening, they have to wait for the ripening process as more fertilizer is sold and more fertilizer is paid back. On the flip side, they do, every time fertilizer is sold, earn more stock, and therefore are participating in a significant amount of the bean seniorage that is being created, as opposed to another way of doing it, which is like tough shit and you'll get your money whenever you get it. People are still continuing to participate in the upside and growth of the protocol, which does seem to have properly aligned the old holders and the new holders and peg maintenance.
Yeah, when I saw how you were doing it, I thought the concept, or how the community was doing it, I thought that the concept was absolutely brilliant, right? It not only aligns everyone's incentives, but it also creates this kind of pent up energy in the community for creating more uses for bean, right? Because the faster there's more adoption and integration of bean elsewhere and use of it and more demand for it, then the faster everyone starts to see more from what they've put in, right? I mean, that would make sense. Were you surprised that at 500% and 250% returns, about the amount that was actually sold, that we got to 23.5%? Or did you think that the pod line was so long at that point that it would probably peter out and it would have to take kind of remobilization of the protocol for that energy to come back and more people to buy more fertilizer?
So on the one hand, one thing that I don't claim to know is what guides the market spirits, if you will. Sure. And so it was very clear that there was a large macro undertone happening since April until August, which was the collapse of Terra, the crypto bear market, the horrible macro environment. And so to some extent, we had no expectations. This is one of those, if the protocol had replanted a couple days after the exploit in April, before the Terra implosion and the ensuing collapse of crypto, I think the protocol probably could have raised more money, but it also could have raised less money. And the plan that was implemented 2 days after the exploit certainly wouldn't have been as good as the plan that was ultimately implemented by the DAO in August.
Makes sense.
Or by June, by the time the sale started. So the concept is, it's hard to know what was expected. I think the thought of selling out the full 70 million to the world at large probably seemed a little bit extreme, unless there was a major buyer that announced they're going to take 25 million of it or 50 million of it, which didn't end up coming to fruition, and is arguably for the best, because Beanstalk doesn't want necessarily one major holder like that. And that probably would have come at a lot of different, the reality is that what the right amount to raise, there was no answer. And so the structure that the DAO ultimately went with was a structure where it didn't matter whether the protocol raised 10% or 100%, there was a path to replanting the protocol. And once replanted, what happens, who can say, right? But the point is that just getting to a place where the price was live, people could buy and sell, the protocol was demonstrating efficacy once again, that was really the thing to optimize around, not how much money came in. Now, had the protocol only raised $5 million, I think that would have been disappointing. Had it only raised $10 million, I think that would have been reasonable, a little bit low, but something that the protocol certainly could have gone off on. And where it ended up settling, I think it was around 15 million prior to the replant, maybe a little bit more, maybe a little less, and now it's up to 17 or so. It was certainly enough for the protocol to healthily replant, and that was really all we cared about. So I think, given the larger implosion around crypto, it was quite a successful, Beanstalk demonstrated a successful ability to attract credit, because again, the whole protocol is credit-based. The only thing that matters is, can the protocol attract credit? In its lowest of low moments, while the rest of the world is blowing up, Beanstalk was able to borrow like $15 million from the market at large. That's pretty fucking cool.
That's awesome. No, I love that approach. And look, I mean, I think you're absolutely right that the brand of, that the entire market sentiment was horrible at the time, and that at the same time, you had algo stablecoins taking this kind of sentiment hit out in the market based on, the colossal failure of one that obviously didn't have what it took. And I think that's got to be frustrating for everybody that's involved, right? It's like, here's this model that was working beautifully, cranking along, and a simple governance exploit, kind of takes it out of commission when it could have actually filled the gap, right? It had the opportunity at that point, when everyone else was losing their mind, to fill a gap, and you guys couldn't. And I'm sure that was incredibly frustrating. I also like the idea that as the returns speed up on people buying fertilizer, that even at 20%, people are going to go for that in a heartbeat, right? After you guys have things kind of running on all cylinders in terms of market and integration, that's going to make a huge difference. In terms of where you go from here, what is the DAO up to these days in terms of, from my perspective, as someone who's not engaged daily in the DAO, I watch it on Discord, I listen to the discussions, I catch your town halls in your university, but what do you believe, or what is the DAO kind of leaning towards in terms of activating and getting more happening in Bean? I heard the other day that there's actually some outside projects that are building on Bean that have actually raised funding. Can you tell me a little bit more about that, and then kind of give me kind of where the direction of the project in general is going?
Sure. So I think to start, because this is really a question of utility, and what are beans going to be used for, and how is the world going to go about starting to accept beans, and what activity is going to be done to help facilitate that. I think the starting point has to be economic. And one of perhaps the inspiration behind Beanstalk is that right now, using decentralized financial primitives to do cool shit, to build businesses, it's impractical. Because at one layer of the stack or another, you've got to use centralized primitives. So you're using USDC or another centralized stablecoin in your stack, as well as potentially other centralized protocols to facilitate your business. And economically, it's not cost effective. You cannot compete. Why can't you compete if you're building on a decentralized network as opposed to the traditional ones? It's because of the carrying costs of stablecoins. So if you're a business and you're trying to run a business profitably, you can't be denominating things in Bitcoin or Ethereum that are excessively volatile. You can, MicroStrategy does it, but in general, it's hard for businesses to do that reliably.
Sure.
And they're looking for a stable denomination of value, a stable unit of account, stable medium of exchange, even a store of value depending on the company. And the concept is that stable coins are really the low volatility option on chain. But stable coins have really high carrying costs. You can use decentralized stable coins that have limited supply. You can use centralized stable coins with slightly larger supplies, but all of them have non-competitive carrying costs. And what that really means is that the cost to use the stable coin doesn't compete with the cost of using dollars. And let's try to get into a little bit why that is. So why is it that businesses built on Bitcoin can't compete with businesses built on dollars? The reality is that the interest rate on dollars is much cheaper than the interest rate on Bitcoin. Why is that? Well, the interest rate on dollars is heavily manipulated by the Federal Reserve, and they're minting dollars constantly in order to buy bonds and artificially manipulate the interest rates lower. And in short, if I'm a business, I'd much rather build on a subsidized system with lower interest rates than on a non-subsidized system with higher interest rates, just from the naive perspective of maximizing my business profits.
Sure.
And the reason the government is able to do this is because of the fiat system. They can mint new dollars, I almost said new beans, and buy treasuries.
Someday.
Exactly. So Beanstalk similarly is able to mint beans arbitrarily. And through the seigniorage, through the distribution of beans, Beanstalk is able to create competitive carrying costs, where in fact, the cost of holding beans for your business is probably competitive with the cost of holding dollars. And we would argue more competitive. So the starting point is that the interest rate for holding your position in beans as opposed to dollars is going to benefit businesses. So businesses that are willing to hold bean exposure are going to have some sort of edge relative to businesses that don't. Economically, that's the starting point. And that's a pretty ripe ground for businesses to come and to build cool shit on top of it. So this is now, you can start to think, well, maybe DeFi will actually work now for the first time because the economics have started to work. You obviously still have transaction fees to deal with, but as we've long joked about, that's above our pay grade, and we hope someone else will figure that out. And we're very excited about some of the stuff going on at the moment, particularly zero knowledge proofs and the ability to really dramatically decrease fees. So we're hopeful that all of that will also get solved. But the point is, with those competitive carrying costs as a starting point, there does seem to be some cool stuff being already built on top of Beanstalk. So a couple of weeks ago, Root announced a $9 million seed round to develop prediction markets on top of Beanstalk. And you may say, well, prediction markets aren't that interesting. But the reality is, if you look at Polymarket or Augur and the current structure of decentralized betting platforms that exist, they all suffer from a liquidity problem. And the liquidity problem can really be traced back to an opportunity cost or a cost of capital problem or a carrying cost problem, which is that the cost of providing the liquidity in these betting markets is too expensive. Where if you need to factor in your carrying costs while you're making a market, it eats into your margin to a point where you can't actually compete with traditional businesses. So if you look at Vegas, for an example, they're making markets on NFL Sunday at plus 110, minus 110. So the spread is -3. They're saying the spread on the game is -3, but they're really collecting 10% on both sides of the bet. It's hard to imagine a higher friction environment than 10% on every trade.
Right.
Why is it that Polymarket or Augur haven't outcompeted Vegas thus far? It's because the cost of providing liquidity on these betting markets in order to collect some VIG is so high that you're actually not making money. And you can't offer competitive spreads relative to Vegas.
Yeah, that's
and again, the core problem is opportunity cost and carrying costs. And in particular, let's now talk about Beanstalk and how this all relates to building on top of Beanstalk. So what we said before is that these silo members have assets deposited in Beanstalk. They either have beans or they have LP tokens, but some bean denominated value. And the concept is that they're constantly earning interest on these deposited assets. They're earning carry. Right. And if you had to withdraw your beans in order to do stuff with them, you have the same problem as you have with USDC or any other asset, where now there's some opportunity cost, in this case even higher, because now your assets are outside of the silo and you're not earning the competitive interest. So what Root is doing, and we've started to talk to a bunch of other protocols or people that are interested in building protocols to do similar things, is to develop on top of the silo. So what that means is that people will be able to keep their assets deposited in Beanstalk, earning competitive carry while using their deposited assets to do cool things.
That's brilliant.
There's no opportunity cost associated with making a root market or doing anything else for that matter on top of the silo, because you're still earning all of your positive carry. And so this is where things start to really click, where people are going to say, oh, so there's all this money in the silo there that's just looking for things to do, because they're collecting interest. They're in this base layer of money that is Beanstalk. And now what can we do with our new money? The businesses that plug into that are going to do really well, and we think compete with traditional businesses. So Root is the first. There seems to be a lot of interest in building different really cool stuff on top of the silo, and we're excited to participate and be a part of it and contribute to some of the ideas that are being thrown around. But it's a very exciting thing to be building on top of, and that's what makes Beanstalk so exciting. It's like, if it works as a base layer, the economics really do start to get people excited about maybe all the shit we've been building for 10 years might actually work for the first time.
That is absolutely brilliant. What's great about that is, number one, that there was the thought to do that. But number two, that there were investors that said, oh, holy shit, I like this concept. But also, oh, holy shit, I trust Beanstalk enough to put my money into something that's building on top of that protocol, right? To me, that's
100%.
That's such a validation. That's absolutely amazing.
And for us, again, we started this a little over a year ago, anonymously. No one knew who we were. The concept that you have another company going out and raising money and doing funding to build on top of Beanstalk and say, this is an economic model we think will support our business into the future. That is really, in and of itself, proof of concept. It's not the same as the peg maintenance and the debt maintenance, but nonetheless, it is a very exciting piece of social validation for the protocol.
Yeah, that's fantastic. I love the idea of assets being usable. It makes sense to do it that way, starting with like the prediction markets, right? I mean, it makes total sense. That makes it easy. It's something people are going to be willing to try, but I can see all kinds of things being built on that, right? Because you know that the value's there. I'm assuming there's some kind of mechanism for transferring the asset held, because I haven't looked at the docs that deeply. But what a great idea. I mean, it makes you want to say maybe the DAO itself should start a fund to incubate and invest in projects utilizing that.
Well, that's an interesting thought. I think that, so Bean Sprout is this incubator program that was launched by the DAO a couple quarters ago at this point, and was just after Replant, a new BIP, a Beanstalk improvement proposal, minted new beans for their budget for the rest of the quarter. So there is some sort of acceleration program. Root actually came out of Bean Sprout.
Oh, awesome. Awesome.
And so it is the type of thing where, to get to your original question, how's this all going to happen? There does need to be activity. There do need to be people that are working to make all this stuff happen. But I think that the interesting thing is that Beanstalk offers an economic reason to do so. It's a very compelling one. And therefore, the only question is one of education, getting people to be aware that this does exist, that they can go build their own businesses on top of this that will compete with other traditional businesses. And the cool thing is that Beanstalk has what I call the Beanstalk Brain Trust, just an incredible group of contributors, community members that are all spending a ton of brain power just trying to figure out how to improve the model, what else to do with Beanstalk. And the result is lots of cool ideas. So some of the different contributors to the protocol have already started reaching out that they have different ideas to build on top of the silo. I think that Root was generally pretty inspirational to people, and they realized, hey, like, I can go build my own business on top of Beanstalk. Nice. And it's an exciting place to be. So from our perspective, the protocol still has a lot of work to do demonstrating its efficacy. The DAO has a lot of work to do re-implementing on-chain governance. And to some extent, the real Lindy effect doesn't start until on-chain governance is back. And at that point, the protocol goes back to being totally permissionless. And that's, I think, when we talk about high-level goals for Beanstalk and becoming money, you have to have the permissionless governance. And
Right.
so while it's great to have the peg maintenance demonstrating efficacy and nothing blowing up at the moment, the reality is that there is still multi-sig governance, and that's something that the protocol does need to move away from sooner rather than later. So to that point, Halborn, which did one of the 2 audits of Beanstalk since the exploit and prior to replant, they've been retained on a basically continuous basis
Nice.
in order to continuously audit Beanstalk, audit updates to the protocol in real time prior to being proposed. And so that should allow the DAO to, in an expeditious and relatively safe fashion, move back to on-chain governance in the coming months, let's call it.
Yeah, I mean, that's not an easy nut to crack, right? I mean, exploits of on-chain governance have been happening across the ecosystem for quite a while. So obviously, I don't think anybody wants us. I personally wouldn't want to see the DAO rush into that, right? I would definitely want to make sure that's really thought through. And there are examples out there for you to work through. Now, the other big piece of this is use of Bean, right? As a community, we all want to see more projects using Bean, potentially integrations and somehow to the real world, to fintech, to whatever. I mean, we all have these dreams in DeFi, no matter what the protocol. But obviously, the more use of Bean, the faster everything kind of speeds up. The protocol is tested further. The functioning of the economy of it gets to do that. From a kind of partnership, biz dev capability, do you have people on the team that are doing that? Do you have people in the community that are out like trying to put deals together or trying to encourage and recruit projects and developers in to build on it?
So I think you can kind of bifurcate things in terms of on-chain and off-chain. There has been previously, I don't know what the current status is post-replant, but prior to the exploit, there was like a Beanstalk Farms BD team that was focused on building relationships with some of the other DeFi protocols and getting the word out there that this exists. I think at this point, Beanstalk does have some name brand recognition, and
Sure.
hard to find people in crypto that don't know about Beanstalk. So it's a little bit of a different focus than just general awareness. But in terms of integrations with other protocols, I think that's something that's likely going to take a little bit of time, particularly given the exploit. And we're not, I think as a collective, we're not rushing to jam this down anyone's throats after perhaps the bad taste from April. So as an example, the Bean 3 curve pool was whitelisted for curve gauge a couple weeks before the exploit. And so that's the type of thing. It's like, well, how quickly do you go back to the curve DAO and say, hey,
we're
ready to go again? It's like, well, there's a little bit of art to this as opposed to science. And from that perspective, not sure anyone's in a big rush either. Like, we want to be respectful of giving the protocol its time to demonstrate it still works. Now, on off-chain, and I think one of the big problems around adoption in general, and Beans in particular, is the friction associated with going from off-chain assets to on-chain assets. And that's not something that we focus on, right? That's what the exchanges do. They handle that bridge between the physical world and the metaverse to some extent. And the question is, well, if you want real world use of Beans, to some extent you need them on exchanges, and that's not really something that we think it's valuable to spend time on, because if the exchanges view it as profitable for them to list because they think there'll be volume, they'll do it. And so at some point that'll hopefully sort itself out. It may not, that can only worry about so many things. I think if you go back to the economics and trying to think about over maybe not a couple months, which is less of a focus, and more a couple years, how do we get to there being an economy that makes sense operating on top of Beanstalk? Let's take a business, let's say something simple like a water bottle plant that takes water, it puts it in bottles, and now it ships out the bottles. If this business has decided, due to the economics of Beanstalk, to move some or all of their cash position into Beanstalk, there is now going to be a significant friction associated with moving their cash position into and out of Beanstalk, into the fiat world. And so presumably, in order to get away from that friction, they're going to want to offer some slight discount to people that are going to pay in Beans, so they don't have to go through the friction of converting back and forth. And from that perspective, you can quickly see how consumers that are in the Beanstalk ecosystem will start to prefer buying from Beanstalk businesses? Well, because I get 1% discount or a 2% discount. And that's beneficial for the business because now there's lower friction. They're saving on the friction costs. They get their bean position immediately. And for a consumer, it's better. And so when we think about real economic activity and not just someone adding the bean token to a contract that already exists, we're talking about people really starting to use beans as a cryptocurrency to run their lives and run their businesses. That's what gets us excited. And I think that you can see that the slow, steady adoption, the marginal adopter of Beanstalk and beans, there's a lot to benefit that individual adopter. And there is something to be said for creating a sufficient minimal set of users and businesses that there's a mini economy forming where you kind of go from 0 to 1.
Right.
But we're big believers in that economics sort of rules everything. And that if you just get the economics right, a lot of the rest should play itself out. So from that perspective, we're trying to just have Beanstalk continue to get the economics right, continue to put its best foot forward from a peg maintenance, a community, and a communication perspective, and think that the rest will sort itself out because of the world that we live in and the curiosity of humans and the wonderful free market capitalism that we're all still clinging on to that seems to be further and further in the distance every day. But we still have faith that there's enough of that spirit to really get this thing going. So we're glass half full on that front.
I love it. That's awesome. Do you find, look, I mean, I truly believe in your ethos or your goal for full decentralization. I understand that you want the DAO to be making decisions. You, Publius, as a group, obviously planned and built this thing and deployed it with a vision for where you wanted it to hopefully go. Do you find it difficult now to kind of, especially after the exploit, to kind of straddle the fence between leader, vision, community member? I mean, is it getting easier now because things are rolling again and so you can, and the DAO's rolling and people are engaged? Is it getting easier for you to just suggest things, or are you still having to play kind of the role of leader / community member?
So it's a fabulous question, Brad, and one that I don't know if I can answer being kind of in these shoes, right? It's hard to have a third party perspective on this to some extent. Now, I think it has to be said in the spirit of honesty that we were anonymous for a reason, right?
Sure.
The goal was always for Publius to disappear because we recognize that people make idols and people want to be told, hey, here's the right answer. And this isn't a system where there are right answers. And to some extent, having an ecosystem where there are no right answers is kind of the point, right?
Right.
And we don't want to be the source of the right answers. So it has to be said that there was a major cost in us doxing ourselves. In hindsight, it feels like an obvious thing to do and was probably the right decision, but it still sucks. And we would much prefer to still be anonymous. There's some nice parts, which is that we've gotten to meet and we'll hopefully get to continue to meet a lot of the people now that have moved their whole lives to Beanstalk, and that's very rewarding. And there's a whole community that we get to be a part of. But nonetheless, we do want Publius to disappear. And getting Publius to disappear when people know where I live is it's a little harder to do, Brad.
That's brutal.
And so it is brutal to some extent. And it's not like we spend a lot of time mourning the death of Publius, if you will. Like it's a shame that we had to dox ourselves, but you got to do what you got to do. And so with that said, I think people still generally do view us as a guide, hesitant to use the word leader, although if you ask other people, they may be less concerned about using that word. But certainly people are looking for us as a North Star. And I don't think that at this point in time, there's necessarily anything wrong with that in the sense that the protocol is not done. So when Beanstalk was originally deployed in August of 2021, we thought this is pretty close to the we tried to do our absolute best, and you're trying to create something perfect, or, you can't make it perfect, but you're going to do everything you can to make it as good as possible. You look at Beanstalk today compared to the model from a year ago, it doesn't compare. The model today is orders of magnitude better than the model that was deployed a little over a year ago. And so from that perspective, can the model be infinitely improved? Probably. Is there going to be a point where the model is good enough that Publius's job is done? Also probably.
Right.
And so where we're at now is this weird intermediate phase where there's clearly a lot that still needs to get done. We do have thoughts about how it should be done in order to maximize the economy that can one day exist on top of Beanstalk. And so there is like a real open question as to what's the right level of involvement. Should we continue to be involved as Publius? Should we start to be involved as just contributors, Ben, Brendan, and Mikey? Like, what is the right balance there? We really don't have a good answer. And this is a question that we sit on a lot and try to figure. We're thinking constantly about what the right thing to do is. And want to say that we're optimizing around the success of Beanstalk, but it's hard to know what is actually going to lead to that success. And it's like maybe just throwing our hands up and walking away right now, that's the best thing for Beanstalk. And if it lives and if it dies. But on the other hand, we tend to believe that there are some improvements we have to make, or we'd like to propose to the DAO to make, that should make a real difference. And it's like, what will we ever get to the point where we think we've done enough and we really can walk away? We do believe that's within sight. It may be a year or 2 years away, but I think the goal remains for Publius to disappear. This is a really tricky question to answer properly, Brad, because we really don't know what to do here.
Sure.
And even more than perhaps Beanstalk, which is optimizing around human behavior, this is even more so like just a question of human behavior.
Yep.
And really tough to get right. So one, we'll continue to ask ourselves frequently and reevaluate in real time, but don't really know on that one yet.
All right. This next question is going to sound a little silly, but I'm compelled to ask it anyway. Do you think that the three of you and kind of your desire to delete yourselves, right? I always tell my kids, my job is to delete myself. My goal is so that you never have to use me for anything, right? Or need me to carry on an independent life. Do you think, and like I said, silly question, but it just feels like I need to ask, do you think the three of you gained kind of that attitude, that ethos of this decentralized, I want to let it go, I want the market to work on it, I want the community to grow it, came from being engaged in crypto? Or do you think that came from, your parents, how you were raised, your community? I mean, because most people in this world, we build something, we want to own it, we want to take credit for it. It's, for me, living in this world has really kind of reprogrammed my brain, right, to have that. Do you think you guys had that coming in, or do you think that's something you learned throughout the process of getting involved in crypto and understanding decentralization, et cetera?
It's not a silly question at all, Brad. It's quite a thoughtful question, and one I've never given much thought to. Why are these the things that are important to us? I think that it would be very hard to discount the role that our families have played. And obviously there's a lot of ego and hubris associated with thinking you can start your own global money. So we're not going to claim to be the most humble people in the world. But I think that there is some recognition that it's not about us. And that applies to in life in general. And I do think that's a life lesson that we've learned from our families and through life, that things really aren't about us. And that does speak to the ego. But I think more than that, even, the goal is to create something that's bigger than us. Yes. And we're going to die. We may die sooner rather than later. Hopefully not. But the really cool thing about cryptocurrency is that, and tech that's built on decentralized primitives, that it's not for anyone in particular. It's not by anyone in particular. It just is. It's totally neutral. The software doesn't care if you're gay or straight, if you're black, if you're a Jew, in my case. Like that, this is something that 100 years ago, all of my family's wealth, I was just reading my grandfather's memoirs, all of our money, everywhere, Czech, Greece, Turkey, France, everywhere, all of our money was taken. I'm introducing cryptocurrency to some 11-year-old that was visiting my family this weekend. And I say to her, so this money's in the metaverse. It's not physical. Do you know what's good about that? And she responds without missing a beat. Well, no one can take it. It's like there's something so greater
awesome.
than the individual humans about this technology. And I mean, speaking candidly, if you look at what Satoshi created by doing it anonymously and then disappearing, they created like a meme. It's from a mimetic perspective, it's this thing that people have bought into and it guides their life. And we don't want us to be the reason for people to buy into the Beanstalk meme. Like, it's not me. I'm going to disappear. If you're buying in because of me, you're in it for the wrong reasons.
Right.
So the point is, if Beanstalk is to become successful, we need people to use beans and love Beanstalk because of Beanstalk, not because of us or because of any other reason. And from that perspective, it becomes very obvious what to do, right? And then it's a question of, well, how do you minimize the effect that you're taking control of this or that you have influence over this? And even though we can't control the governance anymore, we don't have ownership privileges of the contract or anything, the human element of it is, if I say something, people are going to listen. And so that really gets to the point of, you can't, if this was about us, Brad, it would be so easy to make it about us.
Sure.
And therefore, it's not even a question of making it about us. It kind of already is. So the point is, how can we make it as not about us as humanly possible, recognizing that human nature is to ascribe the author the credit of the words, when it's like, well, you know, they got their words from lots of other places, but the people that wrote it down, they're the ones that get the credit. So we recognize that's human nature, and we're heavily fighting against that because we want Beanstalk to speak for itself. And it's a tough thing to do. So hopefully that gets to the spirit of a little bit, but yeah, not sure exactly where it came from, but definitely it came from a desire, going back to that ego or hubris, to create something amazing and create something great. And we would get in the way of that.
That's awesome. That's great. No, I think that's an awesome answer. So speaking of your family, when the last time we spoke, you were talking about the pain of this exploit happening over at Passover weekend, correct? How are they all doing? And are you able to like describe how you're solving this problem to them, or is it just, hey, we're working on it?
So I think in general, how are they doing? They, you know, it's all meaningless to them. So from their perspective, you know, it's like, I think the levels of understanding depend on the family member.
Sure.
You know, the reality is that if the people that are closest to us have questions, we're not explaining things well enough. So I think to some extent, we, over the past 2-3 months since the exploit, there haven't been that many incoming questions. So maybe that's an indication that we're explaining ourselves really well. Maybe it's an indication of, you know, even the family members have checked out. So, you know, it's one of those things where after the replant, started getting the incoming texts again. Who knows, Brad? It's all, it's hard to know sometimes, but they didn't kick me out of the family.
Good.
And therefore, so far, so good.
Awesome. Awesome. Okay. Last kind of important question. You know, look, we're all aware of the sanctions against Tornado Cash, a contract of all things, code. And I think we all are unanimously in agreement of how ridiculous that is, how wrong it is, what a violation of free speech that is, all of those kinds of core things. But it brought up for something I have been talking about for a very long time in this space, and that is our dependency on stablecoins with blacklists, USDC and USDT. And I actually had a pretty in-depth conversation with the founder of Circle about this, because I was ranting about it one day, and he said, well, if there is not a regulatory compliant stablecoin, then the money from TradFi and the money from institutional is not going to come into the space. And we can debate whether that's a good or a bad thing, them coming into this space, but I understand that positioning for them. But all of DeFi has this massive dependency on USDC, and even Beanstalk has a level of dependency on USDC. So I'm curious, number one, is that something that worries you, makes you concerned, the sanctions and everything else? And number two, how do you see a path forward for us to start unwinding at least some of that, either as Beanstalk or as a community as a whole?
Sure. This is a great question and very important. So to start, let's talk about the relationship between Beanstalk and USDC. So currently, the only pool that Beans trade against is the Bean 3 curve pool. Now, that means that the value that Beans have in their liquidity pools mostly comes from USDC and USDT. And DAI is a wrapper of USDC for the most part, so it's still USDC.
Yeah.
And in particular, we talk about where's Beanstalk at right now. It's far from where it would like to be, in the sense that which chain Beanstalk runs on after the merge is going to be 100% up to the operators of USDC and USDT, because whichever chain 3 curve retains value on will be the chain that Beans retain value on, because that's where the Beans are trading. And or that's what Beans are trading against, we should say. And therefore, that kind of sucks. That's not what you'd like. You'd like your DAO members to be able to choose, well, which chain do we want to honor? Or maybe both chains. That's the starting point. Now, when Beanstalk was originally deployed, there was only a Bean ETH pool, and Beanstalk was able to derive the price of $1 by comparing the Bean ETH pool relative to the USDC ETH pool on Uniswap. And this is where things get, I think, interesting. So why is it that Beans wanted to construct this Bean ETH pair and then compare it to the ETH USDC pair? Well, the first part is that Beanstalk doesn't want any direct exposure to USDC, right? So the first problem that any stablecoin needs to answer is, what is the price of $1? So, or what is the price of whatever it is that you're pegged to?
Right.
And USDC and USDT function as pretty good bridges from the physical world to the metaverse. What is the value of $1? Well, there's centralized dollars on the blockchain, but they're pretty close to dollars. And so the point is that Beanstalk could derive, and still does in some ways, but it's a little more directly related, can derive the price of a bean without any direct exposure to USDC. So there's a theoretical implementation where there's no direct exposure. Right now there is, because beans trade against USDC in the form of 3 curve. However, the problem is that the 3 curve and the USDC, it is highly censorable, as you said. They have blacklists.
Right.
And the question, there's a couple open questions. One open question is, maybe having a chain link oracle that determines the price of $1 is better than USDC, because USDC is just centralized and can be censored at any time. And even though Chainlink has its issues, maybe that's a better, more censorship resistant for the source of $1. That's something we're thinking about. Another thing to think about is that at scale, let's say that USDC becomes like a highly centralized, censored stablecoin, but it's still used in some cases. The point is that Beanstalk can still use USDC to derive the price of $1, even if who can use USDC is highly regulated. Beanstalk doesn't need to use the USDC. As long as it's on chain, it can use it to derive the price of $1. But, and it's a big but, the more centralized and censored and select the user base, the less efficient the market. And therefore, the less reliable the market is as an actual price source for the price of $1. And particularly as Beanstalk scales, manipulating the price of USDC 1 basis point can be quite significant. And so from that perspective, it's unclear if centralized stablecoins will really scale with Beanstalk, as Beanstalk hopefully grows to the trillions of beans. At some point, you may kind of reach that maximum size where USDC or USDT or any centralized stablecoin functions as a good source of the price of $1, or any other price for that matter, and therefore a shift to a Chainlink style Oracle solution or a Taylor style Oracle might be necessary at some point. So that's the reality. Think that the original ETH Bean USDC ETH ratio, that was a pretty unique way to derive the price of $1 without any direct exposure to USDC, but as evidenced by, as evidenced by the fact that the protocol replanted with a Bean 3 curve pool, it's not really viewed as a perfect solution. And the plan is to launch a Bean ETH pool soon, but nonetheless, particularly at this stage of the game, hard to have a stablecoin without some exposure to USDC, at least in the form of trading, right? You can have a Bean USDC pool that could get blacklisted at some point, that just means that some of the value beans are trading against is now worthless. That doesn't mean the beans are worthless, but it definitely hurts.
Sure.
So you can't really get that down to zero. You can, by diversifying the exposure of the protocol to different assets that it trades against, minimize the exposure to any given single centralized issuer. I think at the end of the day, you do also have to be prepared for a coordinated censor attempt where USDC, Tether, and maybe a couple other issuers of assets that Beans trade against all at once blacklist pools. Beanstalk really needs to be ready for everything. So these are some of the things that the new governance system that's being designed is being optimized around, and really trying to figure out how to create decentralized permissionless governance in perpetuity that allows for the answering of all of these really sophisticated economics and social questions.
Awesome. Anything else going on that we need to know about that we didn't cover today?
Well, there's lots of stuff going on, Brad, but I'm sure we'll talk about it next time. There's a lot of good stuff going on.
Sounds good, man. I appreciate it. Thanks for coming on. You're an awesome interview, man. You do a great job with this. Love talking to you. So appreciate you taking the time.
Appreciate your time as well, Brad.